Welcome everyone back to my final daily report market analysis video with me, Richard Market Analyst at Hantec on Thursday 26th of September. Let's look at this gold chart, which I'm increasingly turning into a neutral stance. It looked as though earlier this week that the market was finding traction and building towards the upper reaches of what is essentially still a range play between 1481, that reaction low from earlier mid-August, back up to 1577. You can see that the market has found support repeatedly above that 1481 level, but not really able to challenge that 1557 level. So there is effectively a range play at work here, and you can see that through the fact that the 21-day moving average, which had been consistently rising, has now sort of turned flat. It's actually even falling slightly in the past sort of two and a half weeks. Now within this we have this uptrend of the last 4 months. So that uptrend of the last 4 months is still broadly intact, and the market has picked up above 1,500 bucks again. 1501 yesterday supportive, so basically 1,500 bucks is the basis of support, that uptrend that is in place there. But if you look at the momentum indicators, what you'd expect to see if the bulls were back in control is this RSI pulling above 60. You'd see the MACD lines bull crossing, you'd see the stochastics still sort of accelerating higher. That is a situation that is not happening. We're seeing the RSI faltering at 60, so it's effectively between 40 and 60, very much ranging in its outlook effectively then. You've got the MACD lines, which have again just started to roll over back towards neutral. Are they starting to now hover around neutral? Stochastics sort of faltering, rolling over around 50. So pretty much fairly neutral in those momentum indicators. 21-day moving average, neutral. The failure of that bull run, you're back underneath the pivot line at 1517. You're now also finding a little bit of resistance at 1511 and 1517. So it's I think it's a fairly neutral position that we find gold in at the moment. You could argue that there is a minor negative bias, considering we're sort of below that 1517 mark, and again 1511 basis of resistance, and a little bit of a negative configuration you could argue on the RSI MACD lines as well on the hourly chart, but it's just still within this uptrend. So a little negative bias you could argue, but nothing really doing in terms of direction on gold at the moment. We need some traction, we need some sustainable traction, and it got, obviously yesterday's bear candle has sort of scuppered that for now, so we're still once more looking for that traction. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars. Thank you, and I'll speak to you soon.